Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. All right, guys. FOMC meeting, January. The moment we've been waiting all month for. I actually don't think that anything significant is going to happen at this meeting. But here, Vincenzo says, I'm hoping this reaction is dramatic and over the top. Even though I don't think that there's going to be any significant economic monetary policy information in this meeting, I do think that the markets are going to flip. Just watching. So let's come over here to the charts now. Hey, Jack music. I hope that I can make a good episode for that, because I tell you what, TikTok. The frustrating thing about TikTok, you do really good on one video, doesn't mean they're gonna like the next one. It actually might mean they're less likely to like the next one because maybe it gets old. Your audience on TikTok is just so unreliable. Anyways, charts. S&P 500. We did see a little bit of a sell earlier, but it's since recovered. Treasuries, look at the range on these treasuries, just back and forth all over the place. Oil took a little bit of a haircut, as has natural gas. Gold and silver again, where they were this morning, kind of selling a little bit lower end of the range. Copper kind of going along with them. Cryptocurrencies, the dollar sitting just above 96, kind of in a 10-cent range. And cryptocurrencies slightly positive, although pointed downwards at the moment. We do got some good stuff because McDonald's disappointed Elon Musk. Dogecoin hodlers are still underwater, so we at least have that to make fun of today. But so you can see, like, there are flows out there, but it's nothing extreme. So it does look like most people are kind of sitting on their hands and waiting for the meeting. But especially all of the action that we had earlier in the week, and then I was still seeing flows today. There are probably people on both sides of this trade. So when the announcement comes out, and then during the press conference, I think you're going to see a lot of bizarre stuff. I think you're going to see a lot of a really confusing order flow that isn't going to make much sense to you at all. And if we want to come in and say, okay, it means this, and try and take a trade and just hold it all day and catch some sort of a trend off of it, there's going to have to be a really big change from what the market is expecting in the announcement, right? So otherwise, it's just going to be chaos. But they're probably going to trade it. There's probably going to be activity. Now, I'm seeing a little bit of a pull. There's only 2,000 contracts at each level now, but I'm sure it's going to get less than that here in a minute or so, probably 5 minutes before they decide to just completely pull the liquidity, maybe. Let's make sure we got everything set up here. I think I want to watch the Twitter feed here. Yeah. Today, let's see here. If you want my help mocking something annoying in your life or your career, mention it in the comments and it might become a Dilbert comment. Yeah. Sorry I'm late. I was working harder than a one-eyed beaver in a knitting contest. What? I don't get it. What, they got a picture of here? Some people really think that Powell is gonna like blow things up here. I really think it's gonna be like a nothing burger. We'll see. We'll come in here if they come in and they say surprise rate change 50 basis points. I'm gonna be like, what? Buy all the things. No, buy the treasuries. Buy the interest rates rather. Sell the treasuries. Buy the interest rates. Sell everything else basically. Buy the treasury. Sell everything. If that happens, just straight like just don't even think about it. Just click the button. If that happens, it's not gonna happen though. There's like almost zero chance that that's gonna happen. This has the feeling of being quite anticipated. Well, I think that the combination of the bearish treasury action that we had at the beginning of the month and then the insane volatility that we had Monday and Tuesday has definitely put a lot more eyes than you normally get on the FOMC meeting. But again, I really don't think that the Federal Reserve is going to give us much new information beyond what they gave us in the December meeting. I think it's just going to be like everything's in line with the where everything is proceeding as we have foreseen. That's if Powell could use that phrase, everything is proceeding as we have foreseen, quoting Emperor Palpatine, that would just be amazing. It's not gonna happen though. Okay. We've got about 2 minutes. See, I just can't even wait. I just want it just now. There's nothing else to say. Everything has been said. Frankly, we've been ready for this press conference like a week ago. Should have happened last week. You scheduled it the wrong time, guys. Gonna just settle because there's some activity in Discord here. Fill up your scotch glasses. Yeah, just drinking and sitting this one out might be a good idea. Or really, I'm surprised that the micros are putting anything on here. Whoever putting those 200s on, you might want to adjust your algo. A little bit of selling in ES there, just kind of a little trickle. Let's have fun. Yeah, this the Vista chart is gonna light up like a Christmas tree. So my plan here is if they say no change, that I am gonna try and buy the E-mini. So it might be difficult to catch something here. I guess I can put a stop order right. No, that's not what I wanted. Okay, no change. Good. took the second one. So I will. Oh man, that was a good call there. I'll take one off. Look at the treasuries. We just went. Let's reset that. You're going to be hearing a lot of sirens here. The press conference usually goes for about an hour. So it'll be at the bottom of the hour. So they put the announcement out, give us 30 minutes to digest it. And then, you going to give me an opportunity to take another one? No. Already too late. Oh, I missed my opportunity. Oh, come on. They might give it to me. I mean, one contract is fine if that's what it is. Okay, here is the statement comparison. Open image. You can trade the Bitcoin futures, but it's primarily focused towards futures. I think they will add stocks in the future, though. Okay. They're saying that's not really changed. So they got rid of with progress on vaccinations and strong policy support. Nope, they're just saying indications of economic activity continue to strengthen. They're saying well above 2% in a strong labor market. The federal funds rate that this committee decided to continue, reduce purchases, bringing them to an end in early March. So no change in the pace of the taper. Yeah, and absolutely nothing surprising at all in this statement. So far, as expected, biggest nothing burger ever. We are seeing the treasuries sell off here. Bitcoin is buying, which is kind of funny. So interest rates are rising, but Bitcoin is buying. Is decided that this is good for them, huh? Right. Oh. No, not quite. Not quite. I mean, 30 is not a bad spot. Okay, I'll take one at 30. So here you can see what I was saying in the treasuries. There's a lot of confusing flows. They push down there really hard, and look at how hard they're coming back up. I think that my DOM in MES is like a little laggy. Like when I put an order in, it doesn't immediately show up. And I think that in that instance that it put me in, well, so the original entry was actually kind of a mistake, and that hit in with the market order, but then the other one hit in with a stop. Although I do think with the way that it was looking that it would have been, it still would have been legit. So here's 20. But the trade here is just relief trade. Anybody that was concerned about the FOMC being really bad for the market is probably going to be relieved at the end of all of this. Dollar is jumping to new highs here. I mean, in all honesty, I was tempted to try and put something here in the micro treasuries, and I actually, do you see, I changed my DOM so that I couldn't do it because I was afraid I was going to misclick in it. But it would have been a good trade if I had. Oh boy, big problem for Team Biden. Vice President has the power to cast high-ranking votes to pass a bill, but the Constitution does not give her the power to break ties when it comes to the Senate's advise and consent role for appointments to the Supreme Court. So a Republican will have to cross over in order to get Joe Biden's Supreme Court pick through. Well, good luck with there. I mean, if they, I'd be interesting if they tried Gorsuch again, and I don't think that he would get through. Who do you think? Did you hear about that? So Justice Breyer is going to be retiring, so Biden's going to have to pick a new Supreme Court justice too. Well, how high can they go today in ES if this runs? I was saying if it was the Treasuries, I don't want to try and let the Treasuries run per se, but ES could do some stuff. Well, 4460. 4460, and then beyond that you'd have to get up into like 4560, so that's a little out there. Ooh, look at that. That's a little zany. So I am going to take some off there if I can. Come on. Okay. So there was some major absorption up there. Bitcoin's still holding its gains. Well, you know what? The S&P 500 jumped, so Bitcoin can jump too, I suppose. Because they're heavily correlated right now. It makes sense, right? In the end. What's this Bitfinex saying? Thesis: hedge funds cannot make money on crypto crash. No matter how short their position is, they cannot convert paper crypto profits into real money because liquidity in crypto dries up. The only thing they can do is create major volatility and exit for money at the top. I don't know about that. I mean, you can make money from shorting it on the Bitcoin exchange, for instance. I don't know. New York Fed, FOMC also directed us to maintain all existing policy of rolling over at auction all principal payments from withholdings of treasuries and reinvesting all principal payments of holdings of agency debt and agency mortgage-backed securities in agency mortgage-backed securities. In the long run, we intend to maintain mostly treasury securities. But the balance sheet thing is no change in the balance sheet too. That rise in Delta sure is impressive. How much is it? 20K so far? 20K market, 20K net buy orders in the ES futures. It's pretty good. Very well. Nope, too slow. Okay. Bloomberg reports the SEC is scrutinizing crypto firms Celsius Network, Voyager Digital, and Gemini Trust as part of a broad inquiry into companies that pay interest on virtual token deposits. Oh, hey, am I going to get it? Am I going to get it? Well, they come in almost all the way back, which I wouldn't have had an order there if I didn't think it was a possibility, right? But I'm mostly just gambling here. I don't know what's going to happen. Take one more at the opening price if they give it to me. And then we'll take one contract off at 30 if we can. Okay. Oh, they didn't fill me at the open and they're already turning around. It's okay. We don't need that fifth one. Just go. Just go. Treasuries are recovering that huge down move pretty well, I'd say. Oh, the treasuries can be awfully frustrating in that respect sometimes. Can you imagine if you had caught the short and now it's already come all the way back on you? What's my wife watching over there? It's got scary music. Scary music. Oh, almost. Almost. Like, now we'll do set the solid. We'll go and fill him, and then we'll go and push the lows of the day. By the way, oil? Not moving too much off of all this. This is kind of funny. Everybody forgets about the oil. The dollar initially started moving down, but they've actually come back to break even and are maybe even kind of suggesting that they're going to try and move up. Hey, they give it to me. Okay. So I'll take that one off. That one should be there. Okay. How much am I going to lose here now? Oh man, look at that. That's a little scary movement there. That's probably just stop runs. There's a little bit. Okay, so there's a little bit of a volume cluster around 4402. Yeah, there's some real stop losses there, that's for sure. But look, there was a really big buy-in bolts right there. Wow. Let's zoom our dollar index in here a little bit. Jim. See, that was the kind of move that if these were live orders, that would probably scare me out, huh? Well, they dropped. They came down 50 points from the high. Came down 50 points from the high, but again, everything that I'm seeing here right now, I think there is a little bit of a relief rally, of course, but like everything else, I think this is just traders trading. I don't, like there's all sorts of weird flows coming in here. The treasuries in particular, I think, are a little bit acting a little fishy. The spreads didn't change. Let's see here. Key part in the runoff statement intends to reduce the Federal Reserve securities holdings over time in a predictable manner. That was hinted in the minutes. It will mean that if there are $200 billion in bonds running off in a month, the Fed will cap it at a certain level. Some speculating $100 billion, some less. So there will be some level of reinvestment. The idea is that the runoff isn't lumpy, but the inevitable conclusion, unless they sell via quantitative tightening, is that the pace will be slower than a natural runoff. None of this is a surprise, says Forex Live. I don't think that the selling that came into the ES was because of any of that. I think it's just action reaction sort of stuff. What's Kathy? Who knows what? Who knows what KW is saying? Did you guys see this post on the top of Wall Street Bets today? Oh my gosh, we haven't seen this. I was like, what? This is gonna blow your mind. Where is it? Where is it? Almost where mom is. Apparently there are some worshippers there. Oh, here it is. No, that's not the picture. There's more pictures than that? That is not the one that I saw. Oh, man. What? What? Wait a second. Oh man, there's way more good stuff in here than even I saw. Now I'm checking them again. Oh, where's the... I don't see the post that I'm looking for though. Are they recovering now? Oh, that's a better impulse than we had. Mm-hmm. It's like the title of it was Kathy Wood, but it was spelled Would. Mm-hmm. Oh wow! It's this isn't the picture that I saw before, but look at Kathy Wood when she was younger. I mean, that's her. Do you realize that Kathy Wood is like 66 years old? When I realized, I was like, well, I thought she was old, but I didn't think she was that old. I just thought she was crazy. Yeah, she was pretty good looking as a younger person. Okay, apparently we get Retro Kramer. Oh, what? No, that is not him. What? Okay, apparently a young Jim Cramer had an afro. Oh my gosh, are you for real? Oh, that's so hilarious, dude. I can't believe that. No, come on. Jar Jar says she's hot AF. She's pretty good looking, I gotta say. The other picture I thought was better though, because she was on like the street. She was on the street. It was, and I think she was a little bit older. Because that in that picture, she just looks like a little kid to me. It's like, okay, yeah, 19, but let's see her when she was like 20. Let's see her like in her mid 20s. Man, but I'm not seeing it. They got a bunch of memes about it now. Yeah, I don't know why. Maybe if I just search for wood, WOULD, past 24 hours. I want to know where people get these pictures from. It must be like friends of them seeing it on, post on Reddit and are like, oh yeah, I got a picture of him. Here, I'll show you. No, nothing. Nothing. What about all of Reddit? The some of the comments were hilarious too. No. 98 Kathy Wood photos and premium high-res pictures? What? Wait, do you spell her name Kath with a C? Kathy? Wait. We gotta go back to... You go back here. Well, after that big bout of volatility, they really look like they are settling on the lower end of the range here in MES, and that my trade is not working out. Past 24 hours. I'm gonna find this picture. Maybe not. Never marry first false move in hindsight. I think it's not great to be buying now. I don't know. I still think you could see buy flows. I just, again, especially here in the treasury. So like they went up, they came all the way back up. They're pressuring back down. Maybe the market is just concerned that the interest rates seem to be rising. But again, like I think that you're going to see a lot of really bizarre flows. Like it can't really have too strong of a conviction on anything here, right? Maybe that was the picture that I saw. I just remember it being like she was on the street. I don't know. So was that her like in the 70s? She's 60. She would have been 20 back then in 1980 or in the 80s, I guess. Jeez. 1980. That's crazy. Okay. Okay. Hey, hey, hey. Give me that one. Oh, 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 they're teasing me. Did you see this? I hate it when they do this nonsense. It's like, oh yes, Seth, we can see you have a lot at your average position. We will therefore not allow that order to get hit. That one's not. I've had so many times where it's like literally one tick short, and I'm like, how can it be that close? How? And then you're like, maybe somebody's trying to fade my trades, but then it's like, yeah, but they would probably lose money if they were doing that. It's only a sim trade, so okay, whatever. Whatever. I'm really bothered now that I can't find this other picture. I'm really bothered that I can't find this other picture. One of the comments, this is not her. We've been over this already. Who is it then? Jim Cramer. Wait, what? Deep fakes, please. Oh my gosh, the freaking Reddit. Reddit is just such an awful why do I visit this website so much? Explain to me. Oh, look at this. See somebody in the ES doesn't want it to get to my price. Kind of manipulative, absorbing 20 so we don't. Well, it might not. It might not be a big deal. You might just be taking profits. Who knows? Who knows? That sort of a thing isn't very reliable in this kind of action in the ES. Look at our Vista chart. Let's try and zoom in on the Vista chart here a little bit. Like if we go to like a 30-second interval instead of a minute interval. Oops. I should have just clicked it and typed the number, huh? Okay. 30. Oh, 30's not enough. 10. There we go. Okay, now we can see it. There's definitely some. Okay, so they did fill my order, though. I appreciate it, guys. Oh, thanks, Lucas. 2 minutes. Let's go find him at the very least. YouTube.com/Federal Reserve. Live. Okay, cool. And I will stream the audio out over here. I'll just cover up our micros down here. We don't need to. I'm not going to put a position in on them, so we don't need to see that. It'll be another trap. Well, they might have to rotate around that price a little bit. With that much absorption there, that could be a price that they rotate around a little bit. But I'm okay. I'm okay with how we got it. Maybe they deleted the other post. Maybe they said that they decided that it wasn't actually her and deleted it. Let's see, if I search Google for her, does it show us pictures of her young? No, I just see all the same pictures of her in modern times with those dorky glasses. Too much waiting, you say? No conviction. No conviction, Captain Bryce. Like, I'll take it. I'll take it again. I'll do it again. If they dip for us. And that was a pretty good little buy there. Okay. Okay, hold on. Right there at 20. Okay, so the market makers are putting up a fit. We're probably going to rotate around 44.20. Oh, let's unmute him now.
To do so.
The Fed's power says the economy has shown
economic activity expanded at a robust pace last year, reflecting progress on vaccinations and the reopening of the economy. Fiscal and monetary policy support and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience in the face of the ongoing pandemic. The recent sharp rise in COVID cases associated with the Omicron variant will surely weigh on economic growth this quarter. High-frequency indicators point to reduced spending in COVID-sensitive sectors, such as travel and restaurants.
I need to come over here.
And activity more broadly may also be affected as many workers are unable to report for work because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. If the wave passes quickly, the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months. Over the past year, payroll employment has risen by 6.4 million jobs. The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand remains historically strong.
You think that Owl is trying to pull a fast one on us?
With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years.
Tape is getting a little
While
crazy
labor force
now.
participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who would otherwise be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer-run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal, We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations.
Powell tanking the market?
The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan, announced in December, to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2%
I just know too much.
Goal,
that's the problem, because
the
it says
economy no
everything
longer
on the app.
needs
We know that.
sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook
Are you going
remains
to use
highly
tools to
uncertain.
support the strong labor
Making
market and
appropriate
prevent
monetary
inflation at the same
policy
time?
in this environment requires humility,
Well, remember that they think that
recognizing that the
those two
economy
things are
evolves in unexpected ways. We'll
help
need to
each
be
other
nimble
at the moment,
so that we can
right?
respond to the full range of plausible outcomes.
They think that
With this in mind, we
they
will
think that
remain attentive to
limiting
risks,
inflation will
including
help
the risk that
protect
high
jobs.
inflation is more persistent than expected, and are prepared to respond as appropriate
Can
to
you
achieve
guys hear
our
me
goals.
over when he speaks? Okay.
To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify that the federal funds rate is our primary means of adjusting monetary policy, and that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through adjustments to reinvestments, so that securities roll off our balance sheet.
Turn Powell a
Over
bit down.
time, we intend to hold securities in the amounts needed for our ample reserves
Well,
operating
it's
framework.
supposed to duck him when
And in
I'm
the longer
speaking.
run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our
But maybe
maximum
he was a little
employment and price
he was a
stability
little too
goals.
loud overall.
In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or
So
other
now they're
details of
bouncing. Is
shrinking
that
the
because
balance
of
sheet.
something he said,
We
or
will
is that
discuss
just a
these matters
reaction
in
to the
upcoming
reaction?
meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. For the first question, we'll go to Chris Rugaber at the Associated Press.
Thanks, Michelle, and thank you, Chair Powell. So
No, you don't need to show
it's
me a video. I don't know what I would get out of it.
that the Fed will hike rates.
You're just talking about
perhaps
the
every
small one
other
that you showed me?
meeting. But certainly in the past, the Fed has hiked at every meeting. So I just wanted to ask, are rate hikes at consecutive meetings on the table this year? Is every meeting a live meeting? And on that note, would the Fed consider front-loading some of its rate hikes, even if it doesn't raise every meeting?
Go ahead. Hey,
Thanks.
hey!
So
Remember
as
when I said that's
as
the first
referred
question
to
I
in my
asked? He
opening
asked it,
statement,
and even better. Would
it
they
is
do a
not
double
possible
hike?
to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now.
Okay.
And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook.
Somebody tried to slam them
We'll try
down
to
hard
communicate as
there.
clearly as possible, moving steadily and transparently.
Do you see that?
Transparently. So, more to your question. We know that the economy
Does
is in a
Ken still
very
see
different
that
place
order?
than it was when we began raising rates in
Can't see it
2015.
anymore.
Specifically,
Somewhere
the
up
economy
around
is now much stronger.
44.30, somebody
The labor
swept
market is
sell
far
and then left
stronger.
a big
Inflation is
200
running well
lot
above our
on top
2%
of it.
target, much higher than it was at
Somebody
that
just
time.
bought a ton there, though.
And these differences are likely to have important implications for the appropriate pace of policy adjustments.
Let's
Beyond
go.
that, we
Let's
haven't
go.
made
Come
any
on.
decisions.
If they could buy
Thank
this
you.
up.
Let's go to Victoria Guida at Politico.
Hi, Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are
he's
calling
looking
for
a
us to
little more
move
confident
steadily
today,
away
don't you think?
from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And
This is
I would say that
Japanese
most
here,
FOMC
right?
participants agree that labor market conditions are
I'm
consistent
actually
with maximum
really
employment
surprised
in
by
the
what the
sense
interest
of the
rates are
highest
doing
level of
here.
employment that is consistent with price stability.
I
And that is-
should
that
have
is my
bought them,
personal
huh?
view.
Because look, that's
And
another.
again, very broad
that
support
would have
on the
been 40
committee for the
bucks.
judgment that it will soon be appropriate to raise the target range for the federal funds rate.
But
The
I'm
other
not
thing
quite
is
sure why
maximum
they're selling or why
will evolve
why
over
it
time
would
and through the
continue or
course
not
of the business
continue.
cycle. In the particular situation we're in now, it may well increase. The
See what
level
Zero
of
Hedge
maximum
thinks.
of employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly contemplating would be supportive of that outcome as well. So the thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates
Oh, what the heck?
and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job
Somebody
openings,
is puking hard
quits.
there.
Wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that we can
I'm so
we can
tempted
move,
to do something. I
rates up
see flow
without,
like that. It's hard for me to not want to do
without
something.
having
I
to,
think that it's best for you to
severely
just sit
undermine
out
it.
at the moment.
I
in the
also would
Treasury.
point out that there are
There's a
other
little
forces at
further
work this year
extension.
which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain. And also, fiscal policy is going to be less supportive of growth this year, not of the level of economic activity, but the fiscal impulse to growth will be significantly lower. So there are multiple forces which should be working over the course of the year for inflation to come down. We do realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course, we're prepared to use our tools to ensure that higher inflation does not become entrenched.
Thank you. Let's go to Nick Timrose at the Wall Street Journal.
Good afternoon, Chair Powell. Nick Timmerhouse at the Wall Street Journal. I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then, apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales, or changes in the composition of reinvestments? Thank you.
So I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and a teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions
I was
that
thinking
you're
about selling
asking.
it
And I
there,
expect
and
that this process
work.
will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, but and then, at the appropriate time, we'll provide additional information.
I
So I did
was
the
really, when I
last
saw
cycle
all that, I
when we
said
went
it
through balance
really
sheet
makes me
issues, we
want to
did
do
find that,
something. and I
over the
wanted to
course of
fade
2 or
it.
3 meetings,
I
for
could have
example,
gotten 10
we did
ticks
come
there.
to interesting and better answers, we thought. So
But I
we're just in
really
that
don't
process
feel
now,
comfortable
and at
trading
the
in
next
this
meeting,
action
we'll be
right
turning
now.
to,
I really don't
more
feel
of the
comfortable
details
putting
that
my
you're
money at risk
asking
in this
about.
action, especially the
I would say
Unity
this,
falling
the balance
apart a
sheet
little bit here
is
now.
much bigger. It has a shorter duration than the last time, and the economy is much stronger, and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster. But beyond that, it's really not
Look,
appropriate
no,
for me
they
to
came
speculate
all the way back so quickly.
exactly what that would be. But I would point you to principle number one, which is the committee views changes in the target rate for the federal funds rate as its primary means of adjusting the stance of monetary policy. So we do want the federal funds rate. We want to operationalize that, and we want the balance sheet to be declining in a predictable manner, and we want it to be declining primarily by adjusting reinvestments.
So if I could follow on that, raising rates and reducing the balance sheet both restrain the economy, both tighten monetary policy. How should we think about the relationship between the two? For example, how much passive runoff is equal to every quarter percentage point increase in your benchmark rate?
So again, we think of the balance sheet as moving in a predictable manner, sort of in the background, and that the active tool meeting to meeting is not both of them, it's the federal funds rate. There are rules of thumb, I'm reluctant to land on one of them that equate this. But there's also an element of uncertainty around the balance sheet. I think we have a much better sense, frankly, of how rate increases affect financial conditions and hence economic conditions. Balance sheet is still a relatively new thing for the markets and for us, so we're less certain about that. So again, I think the pattern we'll follow is to arrive at a timing and a pace and composition and all those things, and then announce that with advance notice, and it will it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very
because they don't understand
size,
I mean, maybe
pace, composition, those sorts of things. So we'll be turning to all of those at coming meetings.
For all we know, it's like, oh, you're not being dovish. Okay, we're going to punish you. Like, who knows?
Thank you, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the volatility we've seen in financial markets in the last few weeks strikes you as anything alarming or that might affect the trajectory of policy.
We should maybe get you some colored lighting so that your background looks a little better. And we need to adjust the white balance on your goals. Well, I mean, his tie was, his shirt was good white balance,
the ultimate
but his
focus
skin
that we
tone
have is
seemed
on
off
the
to
real
me.
economy, maximum employment, price stability, and financial conditions matter to the extent that they have implications for achieving the dual mandate. And you also know that we look at broader financial conditions, not one or two things, one or two markets. And what we're always asking ourselves is, are we seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And I don't want to comment on today's financial conditions
I'm fully committed.
broadly, but we're not looking at any one market or so. So that's how we're thinking. In terms of what we've seen, I would say this. We said at our last meeting, we published a summary of economic projections, the median participant expected 3 rate increases this year. And, it's 6 weeks, 7 weeks later now. And you have seen that our communication channel with the markets is working. Markets are now pricing in a number of rate increases. Surveys show that market participants are expecting a balance sheet runoff to begin, at the appropriate time, sometime later this year, perhaps. We haven't made that decision yet. So we feel like the communications we have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations, so that in and of itself is appropriate.
Thank you. Let's go to Howard Schneider.
For a year or thanks, Chair Powell. Howard
There's
Schreiber
another
first.
one, another
for
slip.
a year now, the statements reference the benchmarks for this initial interest rate increase. Now that we're approaching that moment, what are the benchmarks going to be for subsequent rate increases? I know you can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Well, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting. We'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should show through fairly quickly after that.
If I could follow, just on related question, the
December there's kind of a hint of a turn here, but it's just a chart. Wouldn't mean anything. There's definitely the order book is definitely
neutral.
I having problems here.
Do you still think that's a credible narrative for the ultimate path of policy?
The path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become
this amount
entrenched.
of volatility. It's a tough one, but I think there's a really high probability that we have a decent turnaround here.
Monetary policy. A number of factors are supporting a decline in inflation, as I mentioned. Fiscal policy will be providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than we had expected and hoped, that there will be relief on the supply side. So that too should lower these supply side barriers, which are a big part of the story why inflation is high. In addition, monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that for whatever reason the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or a more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Thank you.
Thank you. Let's go to Gina Smialek. Let's go to Gina.
Gina, come on, Gina.
Okay, let's go to Steve Leisman.
Steve, our favorite.
Thank you, Mr. Clinton. Thank you, Mr. Chairman. Mr. Chairman, I have one sort of technical question and one.
Is the end of the world siren completely necessary? Yes.
Question is, if you're going to discuss balance sheet at
I made that sound.
Meetings, and you won't begin balance
I'm very
sheet
proud of
reduction
it.
until after you begin rate hikes. It seems to technically mean that you won't or can't begin balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that the with balance sheet running in the background, that you would possibly be raising rates and running off the balance sheet at the same time. That's sort of the technical question part of it. The principal question I have is, you said it's going to be running in the background. Means it slipped up. But the statement on balance sheet principles
means that
the committee's prepared to adjust
the offers aren't coming in quickly enough, and it's skipping prices.
Economic and financial developments, which suggests there's something of
so
a
normally during normal action, it doesn't
associated
happen
to
very
balance sheet,
often,
won't
and
be
so
running
it's
in the
not so
background.
annoying.
Could
But
you give us any a sense of the discussion or staff presentation?
it's giving us. I mean, look at this.
Surrounding the balance sheet. Thanks.
So let me start by talking about that last paragraph. So
this is terrible trading action. So I don't want anybody to think like, oh, you should trade this. But
building up and then
when you
shrinking
get
the balance
these,
sheet is a complicated one, and it
tend to
involves
cause them to
inevitably
turn.
surprises.
So do you see how they had them up in here, and that's where they
during the
flipped back
prior
down
cycle,
from?
we amended our balance sheet principles.
So they've had them down here. Right?
Now, we
There's a
didn't
pretty good
intend
chance
to do
that they
It just
recover back to
events required us to
4,400.
do so. So we got a pretty robust paragraph.
That's what I'm
there
thinking.
That says,
and
we're free
again,
to
I
do
don't
this
see
at
any
time.
reason for the sell.
And it doesn't mean we're going to.
Not quite
but
sure
if
what
the
they're freaking out
situation
about.
turns out to be different than we had thought, we're not going to be.
I'm sitting here listening to it. I'm not very good at paying attention. Did he say something really bad? I'm not.
A hint. So I mean, I like to think that our
I can't recommend trading it. It's
a
high risk, very high risk.
So
trade this with a 3-tick stop and get the 10 ticks.
Funds rate is the primary means of adjusting the stance of policy.
This is
will
just
use
zany.
determine the timing and pace of reducing the size of the balance sheet
It
to
should
foster the
turn-
dual
it
mandate.
should bring him
We'll
down a
begin to
little bit.
reduce the
Let me
size
increase it.
after we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level to try to get at your question.
How about that?
Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after the.
How about that? Okay, that should make him come down a little bit more fast.
And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this.
In fact, we maybe don't need such a dramatic ratio. There we go.
So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now the balance sheet is substantially larger than it needs to be. We've identified the end state.
I can't hear what it sounds like, but I can see on the meters.
Amounts needed to implement monetary policy efficiently, effectively in the ample reserves regime. So there's a substantial amount of
I probably have them a little too loud.
Shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. And so those are some of the ways I would think this lays out our, the way we're thinking about this. In terms of the timing, I can't really help you. It just says after we get underway. So I would say we're going to have another discussion at the next meeting, and my guess is we'll have at least one other discussion at the meeting after that, and we'll tell you as we make progress, and we'll
got one more dip coming. Could be
start the process of allowing runoff and shrinking the balance sheet at what we find to be the.
I can see the buying coming in, but they haven't broken away. Like the sellers haven't given up. The sellers still look kind of
important discussions on a lot of
the sellers still look kind of confident. Above 43.80, I'm sure that might change, but maybe after he finishes. You could see he finishes and then they rally into the close. It's possible, yeah.
Chair Powell, at the beginning of the conversation, you said risks are two-sided. And I'm wondering if
I wouldn't read too much into any of these moves in like a longer term thing. Like, of course, we want to see if we can find any edge from trading it, but you just got to remember that this action is just going to be really wild and confusing.
Question.
They don't always this kind of action more often than not tends to trip us up, right?
Or maybe sooner. You and I will file our tax returns, and
but
we'll list
I wanted to take a gamble on it, so we did.
To those transactions, we'll put dates.
I'm sticking with it.
Bloomberg asked for the dates of Mr. Kaplan's transactions. The Dallas Fed is not giving us the dates. And I don't see why this is a matter for the
GameStop was up 15%.
Inspector General or anybody else. I mean, why can't he give us the dates? Will you help us get the dates of those transactions? Thanks.
So you asked about the risks first. So the one risk is that inflation risks are still to the upside in the views of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged, and there's a risk that it will move even higher.
Buyers want to get a good price, and they're now pushing, not pushing
yet.
That's
the base case, but
or maybe nobody wants to buy it. I don't know.
We have to be in a position with our monetary policy to address all of the plausible.
The theory behind this trade was that there would be a relief trade. There was, at least initially. They turned down. I didn't hear him say anything to suggest that would happen, but I'm not very good at paying attention, so I might have missed something. I don't know.
And of course, that is a risk to the expansion. You know, we've been saying that what we need here is another long expansion, which is the kind of thing we saw over the
How often do we? Have you not watched the FOMC before NASDAQ killer?
Rise. We saw
I could totally see you not staying up.
Persistently higher for people.
Baby, hey, for France, hey.
There really was no.
You know what? I need to brush up on my French because I want to.
Hit by the
Man, my idol right now is this Jean-Philippe Bouchot guy over in France.
That's going to require.
He's a researcher. I really like him. And I'm like, well, if I'm ever gonna like meet him someday and like geek over him, and I have to speak French.
You know,
I mean, he speaks English very well, but
the COVID is not over.
Buy everything.
COVID can continue to.
We'll see.
Evolve.
Does not look so good right there, that last candle, does it?
Not over, and the risks to it.
That last candle looks like they're determined to make Seth look wrong no matter what he says today.
Sort of a downside risk from a growth standpoint. I would point to, another risk is just further problems in the supply chains, which could slow down activity. And you see the situation in China as a situation there where that's there are no COVID.
They don't have a meeting every month, so the next one, NASDAQ killer, is going to be in March.
May play into more problems in supply chains. In addition, there's what's going on in Eastern Europe and things like that. So there's plenty of risk out there, and we can't.
You're not apologizing. I just find it interesting that you're not familiar with it.
That's what I would say.
And I'm thinking it's probably because of the time zone, right? It's a little bit later for you.
My colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I'm playing no role in it. I seek to play no role in it, and I can't help you here today on this issue, and I'm sorry I can't.
To be more specific, it will be March 16th, and that's where they're expected to raise rates.
Thanks for taking our questions, Chair Powell, and sorry for my tech issues. I wonder if you could tell us a little bit about where your thinking on inflation stands today.
Oh, her camera looks amazing. You got a new camera? She went and she got a DSLR. Okay, but you know what, hon? She got a Sony A7.
And I wonder if you still think that projection
I think she done.
December is a reasonable one, and if your thinking has changed at all, I wonder how you're thinking.
You know how I can tell that it's a Sony A7?
To getting to that
is that number one, her skin tone is perfect, and number two, there's a little bit of blur on her face, and that's something that's built into the camera. She totally got a Sony A7 IV.
I would say that the inflation
I bet you she did. We're gonna have to tweet at her.
Probably slightly
Who was
worse.
that?
I'd be inclined to raise my.
Wow, I have to go back and look at her name and tweet and ask her if she was using a Sony A7 IV.
By a few tenths today. We're not writing down an SEP at this meeting, but I think it hasn't gotten better. It's probably gotten just a bit worse.
Ouch! Ouch! That's another ugly. They're now down 100 points now. Yeah.
So I think if you look at the FOMC participants there's a range there, and that range has been moving to the right.
Okay, well, we made a big bet there.
By the way, if you look at other forecasts,
on it, bouncing out of that area.
For a living,
we were wrong.
The same pattern. So
we
what do we think about
knew that
well,
this was kind of a crapshoot, and it was a sim trade.
We wrote down rate increases,
and I'm just going to.
And
I don't know. What do you think? Should I just puke it now?
Our policy will have to address that. I mean, if it deteriorates meaningfully further, either in the time dimension or in the size of the inflation dimension. So that's how we're thinking about it. As I mentioned, though, I think it's part of this will be that the Fed, moving away from a very highly accommodative policy to a substantially less accommodative policy, and then over time to a policy that's not accommodative in time. I don't know when that will be. Those are the things that we're thinking about. That's part of it.
Let's go search. Yep, that's her.
Fiscal policy.
That's her from the New York Times.
Impulse to growth over the last 2 years.
There's her Twitter account.
Will be negative this year, and so that's another thing. The other one is we will eventually get relief on the supply side, and the ports will be cleared up and there will be semiconductors and things like that. Now, what we're learning is it's just taking much longer. So I think longer than expected, and that I think does raise the risk that that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year, but really the question is going to be what is inflation running at, and so we'll be watching that. And our objective is to get inflation
By the way,
to 2%.
the delta on it falling here, not too crazy.
To keep
So
the labor market healthy. The labor market is very, very strong right now. And I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage
it should just be
increases.
short. Should have just gone
I
short.
mentioned some of the other indicators.
Problem is
So
that I'm looking at this
I
and
think
I'm
that's-
like, this
that's
is
what we're
like
looking
the
at.
point where it
And
could
we're
flip around.
also, we realize, I think, as everyone does, that this outlook is quite uncertain, and that we're going to
It
have
might
to
be able to go a
adapt.
little bit lower.
And we're going to communicate as clearly as we can, but we're going to have
Oh,
to
did I
be
freeze again?
adaptable and
Yeah, my camera died.
move,
It ran out of
move as
battery.
appropriate.
Great, thank you.
I'm just gonna leave it like that. I'm just gonna leave it like that. I look
Thank you,
sexy there.
Michelle. Chair Powell, when you talk about
I look
being
sexy there.
humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and say doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate that this is a different situation. If you look back to where we were in 2015, 16, 17, 18, when we were raising rates, inflation was very close to 2%, even below 2%. Unemployment was not at our estimates of the natural rate, and growth was in the 2 to 3% range. Right now, we have inflation running substantially above 2%, and more persistently than we would like. We have growth even in forecasts, even in the somewhat reduced forecasts for 2022. We still see growth substantially higher than what we estimate to be the potential growth rate. And we see a labor market where, by so many measures, it is historically tight. I think in a way, the least tight aspect of it is looking at the unemployment rate, which is still below our median estimate of maximum employment. If you look at things like quits and job openings, as I mentioned earlier, and wages, you're seeing, and just the ratio of job openings to unemployed, you're seeing a very, very tight.
New rules: high volatility don't trail aggressively.
Labor force participation is significantly lower. It's a percentage point and a half lower than it was
in this kind of action.
2020, maybe a percentage point of that is.
I feel like it's a
retirements.
crapshoot.
Some
Like I really do.
retirements are
Like you can put any kind of rules that you want on there. You're probably going to lose money in the end.
People out there who could come back into the labor force.
Doing it like what I'm doing, like really shooting for the moon is one way of going about it. But
quickly.
Then it's you either win $3,000 or lose $3,000, right? That's a pretty ugly trade, man. Not taking a whole 100-point drop is not what you should be doing,
to
right?
address them as we move into the March meeting and meetings after that.
Oil is not getting hit quite so hard.
Let's go to Rachel.
Treasury's still kind of saying like you could do something. I don't know.
Thank you, Chair Powell, for taking our
You
questions.
could at least try doing some market making here.
About any metrics that the Fed uses
That
to
bounced
assess how
so
inflation
hard.
affects different groups of Americans, especially lower.
But it came down really hard.
And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households? Thank you.
So it's more a matter of I think the problem that we're talking about here is really that people who are on fixed incomes who are living paycheck to paycheck. They're spending most or all of their of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away right away forces people like that to make very difficult decisions. So that's really the point. I'm not aware of, inflation literally falling more on different socioeconomic groups.
This is such a freak show.
Some people are just really prone to suffer more. I mean, for people who are economically well off, inflation isn't good, it's bad. High inflation is bad, but they're going to be able to continue to eat and keep their homes and drive their cars and things like that. It's more
maybe it's when really Powell said we can hike quite a bit before jobs are lost. That might be. Let's see here. Powell puts 50 basis point hikes on the table, says they haven't made any decisions on the increments of hikes.
Yeah, on people with fixed.
That's not how I would
most of their
interpret it, but okay.
Of their income on necessities.
You should just stop talking. I don't know if it has anything to do with what he's saying, though. Let's check Zero Hedge again.
Thank you. Let's go to Edward Lawrence.
Edward always has the best setups. But wait, he's not in his usual setup. What?
Inflation's at a 40-year high. The input costs
okay.
price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late. Now, you said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. Okay. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
So I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not.
Trading View stopped trying 6E prices for you for almost 10
months. What I have been saying is that I expect progress to be made in the second half of this year, mainly.
And while buyers are trying again.
Much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up. But overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023. In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as
so funny every time I look over there and it's just me and I'm not moving. It's hilarious.
Different expansion, as I've said a couple times, with higher inflation.
Well, my CQG hasn't given me any problems yet, and so that's good.
Those differences are likely to be reflected in the policy that we implement.
Thank you. Let's go to Mike McKee.
Thank you, Mr. Chairman. I'd like to sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on average you get a 2% inflation rate?
Is he using a green screen?
The employment part of your mandate, is there some sort of circuit breaker
using a green
that stop you from raising interest rates on the employment side?
So no, there's nothing in our framework about having inflation run below 2%. So
it's kind of hard to tell with the video code
to achieve that outcome. So the answer to that is no. What we're trying to do is keep inflation expectations well anchored at 2%. That's always the ultimate goal, and we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. I mean, if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that. What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong.
Should we stick around for Tesla earnings?
This year,
I think we should. I think we should stick around for Tesla earnings.
Well above potential. I mean, people are forecasting growth. If you think potential growth is around 2, most forecasts are significantly above that for 2022. And that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time. Ideally, what we're trying to achieve is inflation getting back down to 2%, and we're trying to do that in a process that accomplishes that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse in all likelihood. So, but monetary policy will do our job. It is our job to get inflation down to 2%, and a situation where the two goals can be in tension.
I don't like. Well, I told you guys not to trade it, right?
Here, though, because I think a really significant threat.
Did I tell you?
To further strengthening in the labor market in the form
somebody
of
picking up a few contracts right there at 15.
High inflation. And also high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
State dependency was particularly around the thought that if
There's a couple of really good impulses there.
Labor market, we would wait to see actual inflation before we tightened. And so that was a very state dependent thought, because for a long time we'd been tightening on the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
If they close them into margin. Well, margin calls should have already gone out, right?
Thank you for taking my question. I want to ask you, with the benefit of
that might have been what pushed us out of that last range.
Do you feel that monetary policy and fiscal policy?
Let's see here. Modest proposals summarizing historically tight labor market, inflation well above target, inflation more persistent than we thought, inflation outlook deteriorated since December, economy in much different state than last hiking cycle. So not sure if it was his intention, but was not subtle his biases. Jay screwed up.
If you remember what it felt like at the beginning of the pandemic, literally the global economy.
Or maybe he's just telling it like it is.
Including our own economy and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them. And then you have economic activity drops by a shocking amount in one quarter. So there was a real risk of lasting damage. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what
she wanted me to watch the baby, but she's going to take up with him.
And then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And now, what we have now is we have the strongest recovery of any country, and we have
look at that. That was a sad attempt at new lows, but look at the volatility response to it.
Behind the recovery.
And might try again.
The relatively high-class problems that come with that, which are high inflation and a labor shortage. So, and these are serious problems, very serious problems that we're working as hard as we can on. Was it too much? Again, I'm going to leave that to the historians. But look, in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5-year period, and we'll say, we'll have a much better basis to make a judgment.
Probably shouldn't have called it an incident. Probably shouldn't have called it an incident.
It was all founded, though, in a very strong reaction to a unique historical event, and I guess I'll have to leave it at that. I hope I'll be around to see how that looks in 25 years.
I love. Oh my gosh! Did you catch that? He was like almost getting a little bit choked up about it. Like he loves economics so much that he's more excited to find out what the result of his policy is in the long run in 25 years, and he's sitting there hoping that he's gonna live old enough to be able to see that. Because he is older, but I think he will live to be that old.
Monitor the slope of the yield curve, but we don't control the slope of the yield curve. Many factors influence longer term.
They're so close to 4,300.
It's something that we watch, and you will know that from when we had this issue a few years ago. And we take it into account along with many other financial conditions as we try to assess the implications of all those conditions for the economic outlook. So that's one thing I would say. Another is currently you've got a slope, if you think about 2s to 10s, two-year Treasury to 10-year Treasury, I think that's around 75 basis points. That's well within the range of a normal yield curve slope. So it's something we're monitoring.
Our range.
We don't think of it as. I don't think of it as
like what do we call it?
But we do look at it and try to understand the implications and what it's telling us.
VIX projected range was at 43.33. So like we're well beyond.
Would you tie it to U.S. fundamentals, or would it
sanity
be driven by
like this is an even bigger sell relative to the opening range of the VIX than Monday was.
U.S. long-term sovereign debt is an
important
global asset, and the fact that our rates are so much higher than other risk-free sovereign rates around the world may put something of a ceiling on our rates. I don't know, but it would really depend on the facts and circumstances at that time.
Thank you. Let's go to Brian Chung for the last question.
Hi, Chairman Powell. Brian Chung, Yahoo Finance. Within the context of just the broad effort to normalize rates, would you describe what you want to do as a gradual hiking? And then secondly, within the context of hiking cycles, it's often the talking point for financial stability and wanting to make sure that asset bubbles don't merge. Is that something that has also factored into the conversation as you start to think about hiking rates? Thanks.
I would describe what we're doing along these lines. This is going to be
last question. You think it will slow?
We move steadily away from.
Then we get 30 minutes.
Monetary policy that we put in place to deal with the economic effects of the pandemic, and that's going to involve a number of things. It's going to involve, and it does involve, finishing.
Given how far they've gone, it is likely that they reverse some of this.
Additional rate increases as appropriate, and we're going to write down in March our next assessment of what that might be. It's going to continue to evolve as the data evolve. We need to be quite adaptable, I think, in our understanding of this. The last thing we're going to do is we're going to have a couple more meetings, I think, to talk about allowing the balance sheet to begin to run off, and do so in a predictable
they're being a
manner.
little touchy about it.
That's something that we will also be doing as appropriate. And
Is the Seth image a lot frozen? No, the camera just ran out of battery.
Exactly how this is going to go, and
I should have plugged it in with the other power cord.
As I've mentioned,
when it's charging from the computer, it takes a while for it to charge.
The economy is quite different this time. I've said this several times now. The economy is quite different.
I should just get the fake battery.
The labor market is much stronger than it was, and growth is above trend even this year. Let alone last year. So
can I lose 5K? Let's do it, yeah. Oh, whoa! Did you see that? Look at that stop run. That is, you buy that, mother. Oh man, look at that.
In connection with our policy, was that your question?
I'm just mark it by.
Yeah, within the context of other hiking cycles, it seems like worries about asset bubbles emerging as a result of.
Did you see that?
Part of that. I didn't
Holy shit.
I would just say this. We of course have a financial stability framework.
When
And what it
markets
shows is
are freaking out, who comes to save the day? Plunge protection team.
Really, asset prices is one of the
that was like a 2K order that just showed up out of nowhere, and everybody just freaked out and covered.
I don't really think asset prices themselves represent a significant threat to financial stability, and that's because households are in good shape financially than they have been. Businesses are in good shape financially. Defaults on
Can I see it over here?
and that kind of thing. The banks are highly capitalized with high liquidity and quite resilient and strong.
Yes.
There are some
yes, you can see it
in the non-bank financial sector around money market funds. Although the SEC is has made some very positive proposals there. And we also saw some things in the Treasury market during the acute phase of the crisis, which we're looking at ways to address. But overall, the financial stability vulnerabilities are manageable. I would say.
Thank you very much.
Thank you.
I gotta mute it before the music comes on. That was something else. I don't want to tweet that. Okay, here I'll show you. I don't know if you can see it very well. There was 1,000 lot showed up at 4,300 when it was 14 away. It looks like that maybe they filled it and then they added 1,630 on it, and then they added 1,000 on it when it came back up. And you can see the 1,000 still sitting there. Price moved away from it quite quickly. That's funny. Did you actually take that here? Did you show me a picture of it? Yes, you did. Here we go. Let's see. Oh, but only one contract. So it's hard for me to know. That was 500 ticks and you make $400 off of that? See, I don't know what the ranges in the NASDAQ. You could start one. I think the problem is you should start a Twitch channel, because I think that you have to have too many viewers to start streaming on YouTube. But that was a big buy there. That was one of the craziest buys I've ever seen in ES. So at the very least, it's going to they're going to buy up here for a little bit. At least a little bit. It looks like they're just going to plow through those orders. Oh, look at this. Look at this. Wowzer. Oh, he says, I mean, just look. Sorry, guys. Listen. It's all luck is still impressive. Yeah, luck is still impressive, guys. That's the way we should do it. Well, if I tell you, they just got lucky, that's not that. I'm not bashing on them. It's a compliment. I'd rather be lucky. I'd rather just be lucky. But you know what? I don't think I am. I don't think that's me. I don't think I'm lucky. Oh man, look at this thing go. Now they are tagging the average true range stops. So somewhere above 44.36, there could be some puking on the short side. This is gonna be just like on Monday. I think it's just gonna be like this insane rally into the close. I'd rather be professional. No, you're not thinking about this right, Lucas. You could be professional and lose money, or you could be lucky and rich. You see, wouldn't you rather just be lucky? How many lots are we taking? I don't know. Normally I was like 10 was like my max, but that crazy thing happened. I'm not going to miss that one. I don't know. I'm just messing around. Are you? I don't think that he appreciates me taking so many contracts. But it's, how else are we going to have fun? I really should have taken some trades over here in the micros, but we could go short 85 off of what we're seeing right now. No, I don't think I want to fade that. I don't think so. No thanks. No thanks. I'd support your channel as long as you're not streaming the same time as me. But that's what I'm telling you. I think that YouTube, you have to have at least 1,000 subscribers before you can stream, unless they've changed that. So if that's the case, then start a Twitch stream. You're better off exiting. Well, I tell you what. Let's take off 15 of it here, so that we'll be back into a semi-reasonable amount. Come on. It's always those even numbers, 43, 40. Probably they're going to bust it, though. They did break the stops, so. NASDAQ says solar laughs and says, okay, yeah. But you know what the real hard thing is? You know what? Here's the thing, okay? I was always like, hey, if other people stream, that's good. And you know what? Other people did stream and it was good. But you know what I realized is that what I really wanted was other people to make good content. Like Futures Trader 71, he does webinars, but yeah. Make YouTube videos, guys. That's where it's at. Make YouTube videos. And good YouTube videos, because I think that there's so much bullcrap on YouTube about trading, don't you think? Am I the only one that sits and, it's because it's constantly recommending stuff to me. I watch it. I try and keep up what the competition is doing. And I'm like, this is so dumb. Who doesn't know this stuff? This isn't useful. That's false. This sort of, I just can't. It makes me cringe. I'm just so full of myself. That's the problem. Think that I'm the only person that knows what's going on. But it's hard to not feel like that when it's like you've got some stuff that is like it's empirically proven and nobody talks about it. Like and then meanwhile everybody's talking about all this stuff that doesn't work. It drives me crazy. And especially content that's just like for fun, Shouldn't have put my 15 out there. They can see it. They're trying to stop me from getting it. It's like in Star Wars, I shouldn't have come. I'm putting the mission at risk. Well, I made a pretty good call there on them breaking the average true range, but they may well flip all the way back down to 4,300 and break the average true range the other direction too. They love to do that sort of crap. And like there was definitely some profit taking there in the 43-40 range. Probably should have just moved my orders, huh? When I saw that absorption there and it wasn't reaching my price, should have just brought it down into the prices they were absorbing at. But you know what? I'm putting like 15 lots out there. That wouldn't work in the real market, right? So many, I can't teach people. If I start bashing people, they just ban me. So many groups banned me. Seth and those, yeah, I'm sorry, dude. Well, but you're getting better though. You've gotten better. We're getting along. We're having fun. That's the thing though. Like that's the thing, guys. That's changed in me lately. Is I don't know if it's a good thing, but I just don't care if I make money from the trading anymore. I just don't. It used to be so much. I think it used to be so important to me. I think that it being so important to me probably caused me to make poor decisions many, many times. And then sometime around the beginning of December or whenever that was, after I got those big winners, and like I caught a couple of big winners, and then oil screwed me over, and after that it was like I just stopped caring. I just was kind of like, well, what we're doing is really risky. And the most important thing is that we're having fun doing it. So I hope you guys are having fun when you listen to me most of the time. Or you're learning something. Or both. Hope you enjoy the TikToks too. I think that's part of why I've been able to have so much fun with the TikToks. Oh yeah, I've had some fun with the TikToks. I tell you what, that breach of 4,300, that looks like some plunge protection team stuff to me, man. That looks like plunge protection team. Okay, so if we come over to Zero Hedge now, do they have a new story up? No. No SWIFT, no gas. Russia responds to Western threat, says U.S. tries to orchestrate workaround. Tesla earnings preview. Chairman Powell explains just how dovishly hawkish the Fed is. Oil could be the safe haven or traders need. It seems like if there is a safe haven, that it is oil. I think for sure. I want to get back into oil, but I'm not sure where or when. It's important that you care about what you want to care about. Yeah, I don't know. It was just like, eventually I was kind of came to this point that's like, well, even if you're really good at this, whether or not you make money at it or not, there's a large degree of luck involved in it, especially with the way that you want to do it, Seth. And whether you make money from them or not doesn't really mean much of anything. So why are you stressing about it and not just having fun? Yeah. And that has helped a lot. I don't know, like the trading since then hasn't been, great. Haven't caught a good winner since then, but it's okay. I haven't taken as many trades. I've kind of been expecting all of this nonsense, and I'm kind of waiting for them to just like chill out. So I'm hoping next week they chill out, and maybe I can start to be a little bit more active. Because right now the flows are just a little bit too irrational. Brannigan Barrett was kind of making like dovish predictions this morning, and it did not work out that way. That was some good little buy action there, but struggling to confirm a pivot. Oh, actually, they did confirm a pivot over here. But this, if they get just a little bit higher there, they're fighting it. 43, 33.50. I'll clear this up here so we can see. They need to get just another tiny little step higher before the end of the minute to kind of confirm. It doesn't predict anything, but they totally fight over it. You watch. It's if they make another attempt at 43, 33.50, something will try and smack them down. And they're going to try and do it in like the next 20 seconds here. See this sort of thing all the time. Well, they might have just got crushed there. Yeah, that's not good. Well, it's not the end of the world, but maybe market scared of your war stuff too. Maybe. Well, J-Bow was a drag on it. I am still, so obviously it was because he was speaking. Was it because of specific things that he said? Maybe. Like again, not every trade has informational content behind it. And I think that in that case, even if they are making trade off of informational content, the amount of informational content that they're using to trade that they were pulling out of that press conference is pretty questionable, right? It's pretty questionable. He was using very negative language. I didn't see it that way. I don't know. I'm not paying attention, I guess. It sounded to me like the same thing he said a month ago. It sounded to me like the same thing he said last month. But this time it was like, oh, the market was throwing a fit and he didn't go super dovish because of that. That must mean we need to sell it more. You know, like I think that's what they're doing. I think these guys, these hotshot traders, they think they're gonna force the Fed's hand, and because he wasn't dovish, they're gonna punish him for it. Like that's kind of what it looks like is going on to me. It's all in my head, but that's kind of the narrative I've got going on in my head right now. I don't know, maybe. I mean, they both seem reasonable positions, don't they? One position could be that it was very negative language, and so that should cause people to sell. Another take could be that the indexes are trying to force him to be dovish. That was a really good push there up into 43. We could see some crazy moves here in the last 15, 20 minutes. Wouldn't be a long trader if 40 folds here again, though. Yeah. Well, I think that was just a little bit more of people stopping out. They don't seem to have picked a direction yet. I didn't have my limit orders out there, so would have filled me from before, huh? Where was it? Right there. But I don't really want it. Oh, jeez. I kind of, in fact, I'm kind of tempted to hold this into the close. What do you think Tesla's gonna do? Okay, oh no, I know it'll be bad. I know it'll be bad. I'm not gonna mess with it. I was thinking, let's try turning the camera back on so that you can't see my sexy pose. Do you like my sexy pose there in the bottom left? Draw me like your Frenchman. I'm probably giving you guys all sorts of visual images that you didn't want now. Musk already going to Mars? Is that it? He's leaving? Good. No. When Elon Musk lives on Mars, will he be able to tweet from there? That's what we need to know. Sexy the oh man. Yeah. At first blush, it seems like the Fed is saying your hawkish fears are wrong today, but they could be right as early as tomorrow, says efficient market hype. So I'm not 100% sure what he means by that, but it seems to me like the Federal Reserve was saying that everything seems to be going fine. And you guys are just freaking out for no reason. And, you know, if we're getting a slowdown and the data says that we shouldn't raise interest rates, then in March we won't raise interest rates. That seems simple to me. Those treasuries just keep selling, dude. They just keep selling. Like, we did get the confusing order flow that I was anticipating in the treasury, but then there was a sell associated with that was big too, probably from the press conference, but okay. That doesn't look too bad. That doesn't look too bad. No, new high, not quite yet. It's that same spot, but they're gonna bust it. Okay, there you go. They busted it. Now they can go. Well, they made a good push there, and they came right back down. It's a battle here, isn't it? Denied, yeah. Neither side giving in here, I don't think. Well, I think that at some point some of these shorts are going to have to cover, but we'll see. Like, what do you think the market on close and balance is going to be? Oh, you know, I don't even have it up in here. Hold on, we need to fix that. Financial, no, not finance. That yet. There we go. I think, oh, okay, so they did tell us about 3 minutes ago 170 million buy sites, so that's a small imbalance. I bet you that on the close a huge buy is going to come in.
Who'd like to read a breakdown of the FOMC.
That's what I think is going to happen. I think that it's going to be like $800 billion, 800 to a billion, 800 million to a billion. Because that's what it typically is on a day like this. And we've seen it come in the last 15 minutes in the past as well. So, well, that's not too encouraging right there. Yesterday, it fooled everyone. It was a small buy-in balance and then negative 1.2 billion to sell, and we still rallied after earning. Oh yeah, dude. The Microsoft, okay, that Microsoft move, that was freaking weird, right? It comes in, the earnings are like they beat top line, bottom line, everything. Cloud growth was just in line with expectations. That was the only bad thing about their earnings. And somebody sold it down like 10%. Somebody sold it down like 10%. And then later, after everybody forgot about it and assumed that the market is just in a dismal state, then Microsoft bought back up and the markets recovered for the open. Yeah, it was so weird. Yeah. I was already taking a walk. Yeah, I mean, I had made my TikToks about it and everything. Okay, okay. Whoa. Okay, so there's the market on close.
So just whilst we wait for the final orders for the market on close imbalance, just a heads up for 4 p.m. Eastern time or just around that time, we are expecting Intel's Q4 2021 earnings as well as Tesla's Q4 2021 earnings. And looking towards the market on close imbalance sitting at 1.1 billion to the sell side.
Oh, 1.1 billion sell. Well, I was right that it could be a billion, but I was wrong in the direction.
Estimated earning per share at 90 cents. Estimated sales at $18.375 billion. Tesla's
well, we can be the ultimate gambler here and hold it into Tesla earnings.
$39 billion.
Come on, when has Elon and his balance sheet trickery ever let us down with Tesla? Have they ever let us down in Tesla? All I care lately is to not. Yes, this is why I'm used. You know what? There's a lovely way to fix that problem, Captain Price. Is called a sim account, and when you feel the need to trade it, but you know that it's too much risk for you to actually trade it with money, you just switch it over to your sim account and you just trade the sim account, and then you can have all of the fun of trading it without having to feel bad about how much money you lost or didn't. I guess you still get to do the FOMO. I mean, like I was thinking, hey, well, we could buy this. I did say at one point we could buy this. We could have made 20, 50, 60, almost $70 maybe. Man, Fidel cash flow has him blocked. Does he really? Hmm. Was like, how did you know he's seeing anything if you haven't blocked? I don't know. Jeez. I need to figure out how long this guy's been around, because it was like there was this other guy that we banned and then this guy shows up and I'm like not sure if they're the same person. Yeah. Hey. Maybe they go. Maybe they go. Come on. Let's do this. Let's do this. I'm just. It's so close. All right, let's go. Let's go. Let's go. Come on. A little bit more. Yeah, yeah. Go, go, go. No. Oh, there's that stupid. Okay, yeah, there we go. They pushed through the refreshing orders. Good, good, good deal, guys. Stopped out, came back to it again. Fun stuff. Buy that. Higher high. Okay, wait, I have to come back in here. How bad did it get? What was the worst?
Just around 4 p.m. Eastern time, just
What
a
was
heads
the
up.
worst that we
We've
ever
got
had?
Intel's fourth quarter
5,
2021 earnings.
57
Estimated
6.
earning per
Okay.
share at 90 cents. Estimated
Well, I don't know if
sale
we're gonna
at
get to that.
$18.375 billion.
Wow, that would have
Tesla's
to be a
Q4
really big move.
2021 earnings. Estimated earning per share at $2.37.
That'd have to be a really big move for
Estimated
that to
sales
work
at
out for me.
$16.639 billion.
Yeah, this close is going to be nuts. Like it is going to be so funny if like Intel and Tesla earnings come out and are like good, and this market just. But it would be, they could also be bad and just go and push new lows. That would probably be even more funny, wouldn't it? It's crazy, yeah. And like I said, this is what I was saying. I came into this with like it's gonna be a little crazy, even though he's probably not actually gonna say anything important. That's just how it goes. It's like when everybody's geared up and ready to trade, they put the orders in, they've got their plans, they do their stuff, even if it doesn't make any sense. You want to see new lows? It's possible. I think it would be a little bit harder to breach those lows now. Given how 4,300 held and how this has progressed. Like if I was a short, I would be taking the profits already. But never say never. Never say never, huh? How many times have we said something, oh, it would be crazy if X happened, and then there's like, nah, there's no way that's going to happen. And then it happens. Like what if there was a worldwide pandemic and they like shut everybody in their houses and stuff to stop it? Was like, did I give them that idea? That was when I said that stuff originally, I was joking. I thought it was ridiculous that people were that concerned about it. I thought it was ridiculous. I was making fun of it. And then they went and they actually did it. It's like that guy. It's like the globalists are all watching this stream, right? Because there's like the 10 or so of you guys that regularly comment, and then there's like another 20 or so that are quiet. It's like those must be the globalists. That's what it is, right? It's the globalists listening, and they go, "Oh, yeah." Seth thinks that it would be ridiculous for us to do like a lockdown, so that's exactly what we should do. This is looking not
We should
so
shortly be
bad.
receiving Intel and Tesla's fourth quarter 2021 earnings.
Jeez. This is going to be a not so close here. Like it's 15 seconds before it. Look at how nuts it is. There we go. Whew. My computer can't even keep up with this nonsense. Look at that. Okay. Woo. Wow. Wow. Well, they survived that. Wasn't too bad. They survived that.
Intel sees for first quarter revenue about $18.3 billion, estimated at $17.67 billion.
I want to hear those Tesla earnings first. And then when it's a complete disaster, I'll click that flat button. Spot Gamma says deltas are flat. I think they were saying it was 44 something though. I don't know.
Intel sees first quarter adjusted EPS at 80 cents, estimated 86 cents.
Okay.
Intel fourth quarter adjusted earning per share at $1.09. Intel fourth quarter earning per share $1.13. Intel fourth quarter revenue at $20.5 billion.
So that was just Intel. Slightly
Intel
under
sees
expectations.
first quarter EPS at 70 cents. So just looking back over, Intel fourth quarter adjusted earning per share at $1.09, estimated was 90 cents. Intel shares are just down 4% post-market after initial spike was higher.
Initial spike was higher and then they came down.
Also seeing from Intel saying that the board declared a quarterly dividend
Let's
of
pop that out.
36 cents a share.
Take off the range.
Still just waiting on Tesla's fourth quarter 2021 earnings.
We'll do it with 1 minute. We'll add Tesla on here. Oops, wanted it to be new pane. There we go. There we go. Okay.
Intel fourth quarter data center group revenue at $7.31 billion, estimated at $6.73 billion.
Hope springs eternal.
Intel fourth quarter gross margin at 53.6%. Tesla earnings coming out now. Tesla fourth quarter adjusted earning per share at $2.54, estimated at $2.36. Intel
Okay.
Q4 operating margin at 24.3%.
So the Tesla earnings are coming
Tesla
out.
fourth quarter adjusted earning per share at $2.54, estimated at $2.36.
Sounds like they're slightly better than expected in some respects.
Tesla fourth quarter earning per share $2.05. Tesla says electric vehicles can be more profitable than combustion engine. Tesla fourth quarter free cash flow at $2.78 billion, estimated at $1.67 billion. Tesla fourth quarter automotive gross margin at 30.6%, estimated at 29.9%. Tesla says we do aim to increase the production as quickly as we can. Tesla says FSD software is still a primary area of focus.
Okay. Well,
Tesla sees 50% average annual growth in vehicle deliveries. Tesla says software-related profit should accelerate profitability.
hey,
Tesla fourth quarter
whatever.
revenue at $17.72 billion, estimated at $16.64 billion.
Cool. So
Tesla
somehow,
shares dropped 3.3% post-market after results.
after all of that, we made $200.
Tesla says we are making progress on the industrialization of the Cybertruck.
Oh, the MAEMFE on that is
Tesla saw
terrible.
a
That was
continuation of
such
global
a
supply chain
shameful
challenges.
trade.
Tesla says
Wow.
our own factories have been below capacity for several quarters.
What does that teach you guys? You'll get away with it most of the time. You'll get away with it most of the time, but the one time that you don't,
Tesla's just repeating that
that's
supply
the
chain
end.
is the main limiting factor. Tesla does
Tomorrow
expect
should be an
supply chain
interesting
limits to
day.
continue
Okay, so
through
I can
2022.
see that Tesla is kind of starting to fall here now. Not too dramatic though. But could hurt
Tesla
markets
says we
here a
are in
little
the
bit.
process of building a dedicated
But you know what?
Megapack
I got
factory.
some other things to do here. You're gonna make some TikToks and stuff. My voice is starting to get a little
Tesla
tired
says
of
we do
talking.
see software-related profits accelerating over time.
Treasuries keep pushing. Gambling behaviors are not real. Well, yeah, the range is just too much for it, right? But that's like the thing is that I really don't know, especially in ES. Like let's say that I had been on the right side of this and I had been going short. It was so effing choppy still, right? Like they were chopping around in like 20-point ranges. And if I was trading that live, that's like more than enough to stop me out either way. So even if I had been going short, good chance that if I was holding the kinds of stops that I like to hold in the E-minis, that I would have gotten stopped out. That's why I've just kind of gone over to just put an order in and just like, take on $5,000 worth of risk or whatever, just because the ranges in this thing are just ridiculous. I really should have taken, no, I don't. I think I did the right thing in the treasury. I could have taken the trade in the treasury, but I really just didn't have the conviction. I still just don't have the conviction in the trade. I keep seeing the rates go up and I'm kind of like, well, nothing's changed. But the flow is definitely negative, right? I do think by March, I'm thinking by March, we should be to 2%. So I still feel like the 10-year is going a little bit too quickly here. Maybe it recovers tomorrow. I don't know. Does this take us down to like lows? Not quite. Not quite. So let's come in here, mark our charts, Drawing tools, event. Right about
Tesla fourth quarter gross margin at 27.4%, estimated at
put it right here.
26.8%.
There and there. FOMC. And what was this other one? There we go. Oh, yeah, that was Jamie Dimon. So we really haven't had anything since Jamie Dimon spoke. It was really, truly significant.
Tesla fourth quarter capex at a loss of $1.81 billion.
It just kind of makes you wonder: was that move enough?
Profit
was there enough informational content in that FOMC meeting for markets to adjust their hawkish expectations by like a whole week's range? Who am I to say? Who am I to say? But I find it a little curious. I am so sexy. Look at this, man. Look at that. That is just the best. We are taking a picture of that because that is just beautiful. All right. I will see you guys tomorrow in the meantime. Stay profitable.